Are emotions killing your trades? Master trading psychology and turn losses into wins. Markets mirror your mind. If that sounds cliché, stay with me, because today we run a live experiment on the only edge you fully control. Forget the hunt for secret indicators. Forget the fantasy of perfect timing. We are going to test one simple behavior that reveals whether you trade your plan or your emotions. Before your next order, pause and write one sentence that begins with, "I am placing this trade because." Then say it aloud. After you close, write one sentence that begins with, "I exited because." Then say it aloud. No screens needed, just the courage to be honest. This tiny ritual shines a light on impulse, fear, and hope, and it does it in real time. You will hear the gap between story and rules. You will feel the pull to rationalize. Good, that friction is data. Measure it, and your decisions start changing from the inside out. Start here and test what you actually do. Skill under uncertainty beats prediction in every market, because the market rewards behavior, not guesses. Your edge is the way you act when the outcome is unknown. Skill is trained daily. Tools and research matter, yet they only pay when your actions stay aligned as emotions rise and fall. Picture a storm on open water. The wind is news, the waves are price, and your hull is the plan. Most traders chase gusts and swells while ignoring the rivets that keep the boat intact. The craft that survives has steady ballast, small course corrections, and a skipper who respects limits. That skipper is your process. You choose position size before the clouds build. You define the damage you can accept. You rehearse what to do if visibility drops. When the squall hits, you follow the rules, not because you feel calm, but because you made them when you were calm. This is the core thesis. Process converts knowledge into repeatable action. Process shrinks randomness by making each decision more consistent than the last. Process captures the few controllable variables and lets the rest move. Prediction tempts because it feels heroic to call the next wave. Mastery feels boring because it is a checklist, a journal line, a routine breath. Boring wins over time. The mind that accepts uncertainty and executes a plan outlasts the mind that needs to be right. You promised to stay with one approach, then the market twitched and you opened new charts and chased a different system. The thrill of beginning again feels like progress, yet the account balance stays flat. System hopping protects the ego because the system can always be replaced. You defend a single trade like it is your identity. You refuse to scratch because closing would admit the first decision was not perfect. You add size to fix the narrative. You widen the stop to avoid the pain of being wrong. Hope grows louder than risk. After a loss, you feel heat in the neck. Revenge trading promises relief, not profit. It is a bargain with anger that taxes future you. You watch a move run without you and your stomach collapses. Fear of missing out whispers, "This one cannot be missed." You buy high to soothe the feeling and then freeze when it snaps back. The cycle repeats. All of this is human. The first surge is not a flaw. It is a nervous system doing its job. Craving certainty, avoiding pain, and chasing relief are old survival patterns. Now comes the pivot. Today, you do not need a new indicator. You need a behavior you perform under load. One decision at a time, turn emotion into information. Name the trigger. Mark the body cue you notice. State the rule you will follow anyway. If you slip, close the platform, breathe for 1 minute, and write the next smallest step you execute. Agency is built like this, not by arguing with emotion, but by doing the next right action despite it. Consider the quiet discipline behind two names many traders admire. Ed Seykota treated volatility as a tutor, and his edge was behavioral. He decided exits before entries, sized so a loss felt boring, and let the market speak without arguing back. When price contradicted his thesis, he accepted it faster than his feelings could negotiate, because the rule was written in advance. The principle to model is pre-commitment. Define your risk while calm, codify it in one sentence, and follow that sentence when stress rises. Practice by writing, "I will exit if this premise breaks," and honoring it even when the chart tempts you to hope. Small size turns feedback into information instead of pain. Over many decisions, that habit compounds into a posture that can hold winners and release losers without drama. Linda Raschke built durable performance through routine, documentation, and respect for recovery. Her days wrapped around preparation, a list of patterns she could describe clearly, and post-trade notes while the memory was warm. After a drawdown, she cut size, protected attention, and rebuilt rhythm instead of trying to win it all back. The principle to model is ritual. Prepare when you are rested, trade the setups you can define in plain language, and grade execution nightly with a few honest lines. Ritual creates a floor under your worst day and a ceiling on overconfidence in a streak. These stories are not museum pieces. They are templates you can turn into rules that fit your instruments and schedule. Here is how to translate authority into action. Choose one principle, pre-commitment or ritual, and state it as a rule a teenager could understand. Place that sentence on your screen or notebook before the open. Imagine 3 scenarios you face and describe what you will do when the rule is easy and when it is hard. During the session, when you feel the urge to improvise, pause, read the sentence aloud, and act in line with it. If you obey it, note it and allow normal size. If you violate it, note it and cut size for the next decision. At the close, write a paragraph about what the rule changed in your behavior today. Authority only matters when it becomes a behavior you can repeat tomorrow and beyond. The most seductive belief in trading is that a perfect setup will fix discipline. It promises that if you find the right pattern, the rules will keep themselves. In reality, the direction is reversed. Discipline makes any reasonable setup profitable enough, and lack of discipline ruins even the best pattern. You see this when a valid entry appears and you hesitate, or when price moves and you chase late, or when a stop is hit and you widen it to avoid the feeling of loss. The setup did not fail. Behavior drifted. Replace the myth with a practice that works under pressure. Decide risk in calm moments and convert it into one-sentence rules that you recite before you act. Size so that a single loss feels ordinary rather than dramatic. Exit when your premise is broken, not when your emotion demands relief. Track a daily score for rule adherence in simple language, like kept the stop, waited for the trigger, recorded the reason. If the score drops for a day, reduce size tomorrow and rebuild rhythm. If the score holds for a week, allow a small increase. The law is simple. Process creates edge, and edge expresses through consistent behavior. When you stop worshiping entries and start honoring rules, your results stabilize. Consistency compounds while variance shrinks as routine becomes automatic and losses remain planned and ordinary over time. Outcomes are noisy. Process is the lever you can actually pull. Amateurs stare at the equity curve and wait for a win to feel confident. Professionals stare at behaviors and let wins accumulate as a side effect. Confidence grows from evidence, and evidence comes from doing the same right things across changing conditions. Choose one daily behavior that anyone could observe and verify. Here is the one I want you to run today. Before the session begins, write your entry rule in one sentence, write your exit premise in one sentence, and write your risk in one sentence. Place the sentences where your eyes land before any click. During the session, act only when your entry sentence is true. If price moves and the sentence is not true, you do nothing. When the premise breaks, you exit. After the session, grade your execution with a tiny rubric in plain words. Award 1 point for waited for the trigger. Award 1 point for honored the stop. Award 1 point for recorded the reason. Your daily score ranges from 0 to 3. If you score 2 or 3, keep size the same tomorrow. If you score 1, cut size in half. If you score 0, do a reset day without live risk and rehearse the sentences aloud. This loop makes behavior stable and turns profit and loss into feedback instead of identity. Over time, the curve starts to reflect the habit, because process compounds and outcome variance shrinks. Track the score in a notebook, not in your head, so pattern becomes visible. 7 days create a baseline. 4 weeks create a habit. Curves may wobble, but behavior line will smooth and strengthen. We will build a daily ritual stack that turns intention into repeatable action. Standardize what you do before the session, during each trade, and after the close. The ritual is light, quick, and strict. It protects attention, converts feelings into information, and keeps risk decisions inside calm moments rather than hot ones. You will prepare with clarity, execute without improvisation, and review with honesty. Then you will adjust one behavior for the next day. This is not a search for perfection. It is a schedule that makes good choices easier to repeat. Begin with preparation. Sit at a clear desk with only what you need. Close extra tabs and silence every alert except the platform and a simple clock. Place a notebook within easy reach and a pen that writes smoothly. Take 5 slow breaths through the nose and let the exhale be a little longer than the inhale. Feel the chair under you and the weight of your feet on the floor. Say out loud that you will trade the plan and not your mood. Calm rules beat hot guesses. Write 3 sentences in the notebook. Write 1 sentence that states the entry rule for today in plain language. Write 1 sentence that states the exit premise that would prove the trade idea wrong. Write 1 sentence that states the maximum loss you will accept for the day. Keep each sentence short enough to read in one breath. Place your finger under each sentence and read it aloud. If a sentence is vague, refine it until a friend could apply it for you without asking any follow-up questions. Pre-rehearse your response to the first loss of the day. Close your eyes and imagine the stop fills. Feel the small sting and the urge to get it back fast. Watch your hands relax on the desk. Hear yourself say, "Reset," and breathe. Picture the next step that aligns with the plan and see yourself take it. This mental rep matters because the nervous system follows practiced pathways when heat rises. You are teaching the body what to do when emotion surges and tries to grab the wheel. Reduce noise in the environment. Keep one chart view that matches your plan. Do not add timeframes to soothe anxiety or flip instruments to chase action. Limit information to what you actually use. Keep water at hand. If a thought about changing strategy appears, park it in the notebook for later study and return to the plan. The goal is not to feel nothing. The goal is to notice the wave and keep steering the same course. Simplicity lowers friction and protects attention at the exact moments that matter. During the session, use micronotes to anchor behavior. Before any order, write a line that begins with, "I am placing this trade because," and finish it with the rule you set. Rate your emotional load by writing the word 1, or 2, or 3, or 4, or 5. 1 means calm, and 5 means flooded. If the load is 4 or 5, reduce size to a token and require the next setup to be textbook. After entry, write the risk in words and place the stop you defined while calm at the level that matches the premise. While the trade is open, glance at the notebook instead of the unrealized line. Read the sentence that describes the exit premise. If the premise breaks, exit. If the premise holds, do nothing. If you feel the pull to interfere, place both feet flat, inhale slowly, exhale slowly, and read the sentence again. Your job is not to predict the next tick. Your job is to honor the rule you wrote when the sea was smooth. The calm of the plan replaces the drama of impulse and protects both capital and attention. After you exit, write a line that begins with, "I exited because," and finish it with the premise result. If you scratched early, admit it. If you held in line with the premise, record that. Then write one sentence that names your current state, such as steady, or restless, or eager. If you feel a surge to get back in quickly, stand up, step away for 1 minute, and let your physiology settle before you return to the screen. Small pauses prevent spirals and help you recover posture before the next decision. Close the day with a simple scorecard. Award 1 point if you waited for your entry sentence to be true before acting. Award 1 point if you honored the stop without widening it. Award 1 point if you recorded the reason before entry and after exit. The daily score is 0, or 1, or 2, or 3. If your score is 2 or 3, keep position size the same tomorrow. If your score is 1, cut size in half. If your score is 0, take a practice day with no live orders and rehearse the sentences aloud. Add scaling and recovery rules so progress is measured. If you achieve at least 4 days in a week with a score of 2 or 3, allow a small size increase the following week. If you record 2 days in a row with a score of 1 or 0, reduce size and add 1 practice drill before the next live session. If a hard daily loss limit is hit, stop for the day, complete the debrief, and plan a lighter next session to rebuild rhythm. Over the next 72 hours, avoid new variables and protect rest. Define a clear re-entry sequence after a blow-up. The next hour is for physiology. Close the platform, walk until breath is steady, drink water, and write the sequence that led to loss. Identify the first deviation from plan and write the smallest fix to test. For the next session, trade at half size and require the first setup to meet all rules. Use automation. Set a reminder before the open, sentences first, then screens. Add a reminder at the close, score, and debrief. Place a note, follow the plan you wrote. Today my entry rule is, my exit premise is, today my maximum loss is, I am placing this trade because, I exited because, emotional load 1 to 5. Daily score 0 to 3. Consistency is built on an ecosystem that removes friction before it appears and guides you back to the plan when pressure rises. Start with environment. Keep a dedicated space for trading that is clean, quiet, and free of non-essential screens. Place only your platform, notebook, clock, and water within reach. Light the room evenly to keep your eyes relaxed. A simple chair and a grounded posture reduce restless fidgeting that turns into impulsive clicks. Protect attention with alert hygiene. Disable every notification that does not relate to your setup. Use 1 sound for fills and 1 for stops, and silence the rest. Reduce inputs to the charts and instruments you actually trade. Routine turns choices into defaults. Open the same way each day, sentences first, platform second. Close the same way each day, score first, then debrief. Sleep, movement, and food are part of risk management. Aim for enough sleep to wake without an alarm. A short walk before the session and steady hydration. Energy is the fuel for patience. Schedule disconnection. After the session ends, step away for a set block of time and do something that has nothing to do with markets. Protect weekends or specific evenings as dry zones with no charts. This creates distance so your mind resets. Build a small circle of accountability. Share your daily score with one trusted peer and ask for theirs. Keep language neutral and focused on behavior. Over weeks, this ecosystem lowers variance because you face fewer hot decisions and more prepared moments. When the path is simple and the signals are quiet, discipline becomes easier to repeat. Review your workspace weekly and remove anything that invites distraction immediately. Intuition becomes reliable only after it is trained and tested. Impulse shouts and wants speed. Trained intuition feels quiet and specific. Today, you will run a simple drill that separates the two and builds trust by evidence. Before the session, write 1 line in the notebook that says, "Intuition tags allowed." During the session, when a sudden urge appears, pause and label it with 1 of 2 tags. Write impulse if the signal is vague, body is tense, or the urge demands hurry. Write intuition if the signal points to a concrete condition you can state in plain language. Take 2 slow breaths, then ask what would prove this wrong. If you cannot answer, tag it impulse and stand down. If you can answer, you may act, but size small and require the condition to be visible on the chart. After the trade, record whether the condition actually occurred. At the close, tally results. Count how many intuition tags aligned with real conditions and how many impulse tags you ignored. Over days, you will see a pattern. The goal is not to trust feelings blindly. The goal is to teach feelings to carry information that can be checked. Practice turns hunches into hypotheses and hypotheses into tested behaviors. Over time, this 30-day challenge turns the daily ritual stack into a lived habit. Each day, you will follow the same simple loop. Begin with calm, act with rules, and finish with a debrief. The aim is not perfection. The aim is consistent execution under ordinary stress. Your score guides size and recovery, and public reporting keeps promise real. At the start of each session, sit at a desk, take 5 slow breaths, and read your 3 sentences aloud. One sentence states your entry rule for today. One sentence states the exit premise that would prove the trade wrong. One sentence states the maximum loss you will accept for the day. Place your finger under each line and commit to act only when those conditions are true. During the session, before any order, write, "I am placing this trade because," and finish it in plain language. Record an emotional load word from 1 to 5. If the load is 4 or 5, use token size and require textbook conditions. After entry, set the stop that matches the premise you wrote while calm. While the trade is open, look at the sentences, not the unrealized line. Exit when the premise breaks. Hold when it holds. After the session, write "I exited because" and a single honest line. Then grade your behavior. Award 1 point for waiting for the trigger. Award 1 point for honoring the stop. Award 1 point for recording the reason before entry and after exit. A daily score of 2 or 3 keeps size the same tomorrow. A score of 1 halves size. A score of 0 means a reset day with no live risk and a rehearsal of the sentences aloud. If you miss any rule, run a recovery step. Close the platform, breathe, write the deviation, define the smallest fix, and return only when settled. Each 7th day, read the week and adjust one behavior. Post your daily score and 1-sentence insight in public or to a trusted partner. When you log at least 4 strong days each week, allow a small size increase the following week. If 2 weekdays arrive in a row, scale down and protect rhythm. Keep the loop simple, speak the sentences, and let the habit carry you for 30 days. You do not need more screens or louder opinions. You need one behavior you can repeat today with intention. Write the 3 sentences before you trade, act only when the entry sentence is true, and exit when the premise breaks. Grade yourself with the simple score and let size follow behavior, not mood. Share a single takeaway in a sentence at the end of your day and read it tomorrow before you begin. That cycle is small, honest, and durable. It will feel quiet at first, even dull, and that is the point. Quiet routines reduce drama and make room for evidence. Keep the desk clear, the breath steady, and the promises small enough to keep. When you miss, repair quickly and return to the plan. When you succeed, keep the same pace. In a month, you will recognize a calmer operator in the mirror. In time, the results will follow the person you practice being. Markets mirror your mind.